All right, how we doing here? Brian Howard with BK's Credit Group, bkscreditgroup.com. And in today's video, what we're actually going to talk about is SBA loans, but particularly why I don't like SBA loans and why I think business credit is a much better alternative to a business loan. Now, don't get me wrong. Sometimes you need a loan in order to grow and get to where it is that you're trying to go with your business. But understand that when you go into a conventional bank, and when I say a conventional bank, that's your Wells Fargo's of the world, your Chase banks, your Bank of America's, your SunTrust, your credit unions, they're going to have SBA loan type products. That's Small Business Administration programs that are backed by the SBA. And these type of programs have the toughest guidelines that's needed in order to get approved. Now, there's statistics out there that suggest as many as 97 to 98% of all business loans that are applied for in the big banks are denied. So that means 97 and 98 out of every 100 people that apply for a business loan through a conventional bank gets denied. Let me just say this. SBA loans are tough. I come across a lot of business owners. I come across startup business owners. I come across seasoned business owners, business owners that have been in business 20 to 30 years. I have yet to come across one business owner that has successfully been qualified for an SBA loan. Okay? That's how tough it is to get an SBA loan. I'm not saying that you can't get one. I'm not saying they don't exist. I'm just saying I don't know anybody that has gotten one. So take a look at the quick slides here. I'll promise to try to make this fairly quickly. But as I said, the big banks pretty much have SBA products. So that means that you're going to have to qualify not only with the SBA guidelines, but you're going to have to qualify with the lender's guideline, the lender being the bank, right? So SBA loans are also tough to qualify for because the lender and the SBA will evaluate almost every aspect of your business for approval. Okay, that's very key. They're going to look at everything as it's related to your business to determine if you're qualified for this loan. To get approved, all aspects of the business and the business owner's personal finances must be near perfect in order to get approved. Pay attention. In order to get approved for an SBA business loan, one of the things that they check is the business owner's personal finance. Okay. Now, I'm staying on that for a reason, because a lot of you shy away from the personal guarantee when it comes to business credit, because you don't want to use your social. You don't want to personally guarantee anything. And I understand that, right? I understand that as a business owner, that's your strategy. You want to build your business to be able to stand on its own. But, I encourage you to think about that in certain situations. Personal guarantees make sense, especially when you're starting out, as long as you're using it strategically and ultimately you're moving toward the no PG. But I stayed on this slide because I wanted you to understand that even if you get the SBA loan, right, they're going to look at your personal finances. So they're going to look at your credit. Okay, there's no way around it. When you're talking about getting money, and I'm talking about some real money, I'm not talking about $2,000, $3,000. I'm talking about $25,000, $50,000, $100,000, $150,000, $200,000. They're going to look at your personal credit. All right, qualify. Now, to get approved for these conventional loans, again, you must have excellent personal credit with no derogatory items being reported. You must have excellent bank credit. Now, I talked about this in another video. That's your bank rating. You must have access to $10,000 liquid in your account, and you need to be able to show that, right, that $10,000 consistently over a 90-day period. When I consult with clients, I tell them 180 days. So that's 6 months. But traditionally they say about 90. I coach mine to 180 days. And then you must have excellent business credit with a paydex score or 80 or above. Notice, even in order to get the Small Business Administration loan, you still need a paydex score and you still need business credit. So why are you delaying building your business credit? Why are you delaying building your business credit? Because you're not going to walk into your bank and get a loan without them pulling your business credit and checking your paydex score. All right. You also need to have excellent financials. You need to be able to show good profits, and you want to show profits that increase from year to year. Now, us as business owners, we trying to write off as much as we can, right? Hey, we trying to write off everything if we can. We trying to show the least amount of revenue as possible so we can pay less taxes. Just know that works in reverse, right, against you when you go into the bank and trying to get a business loan. That's going to work against you. When you go in the bank to try to get a business loan, you want to have as high as revenue as possible, right? So that kind of works against you. So that's something to think about. Now, you also need to manage your cash flow, right? Meaning, you don't want to have insufficient funds, NSFs, and different things like that. And you'll need substantial collateral to offset what you're borrowing, sometimes equal to 100% of what's borrowed. See, this is what business owners don't get, right? They think that they're going to go in there and sit down in the bank and tell the bank, I need $100 for my business because I have this great business idea and it's going to make a lot of money. And I'm not saying that it's not. I just want you to understand how the lending game works. This is what's required. 100% sometimes collateral. What does that mean? That means that even if you can qualify based on all the stuff that I've already talked about, guess what? If they'll qualify you for $100,000, you've got to put up something worth $100,000 in collateral. That could be some real estate you own outright. That could be your retirement account, stocks and bonds. That could be some equipment, like if you own, like let's say you are owner operator and you own several trucks, or you're a restaurant owner and you got high dollar equipment, or you're a construction company and you got high inventory or whatever. However much you borrow, sometimes you need as much as 100% collateral. So if they qualify you for $100,000, you need $100,000 collateral to back this loan. So in other words, they basically taking zero risk out of it for them, because if you don't pay that $100,000, then they come to get whatever it is that you put up for collateral. Some of the other things that you're going to need to provide. You're going to need a profit and loss statement, right? You're going to need a PAL statement, right? And this must be current. It's got to be current. This has got to be within 90 days of the application, right? And then you need to include supplementary schedules from the last 3 years. I know a lot of you don't even have a profit and loss statement, right? I know some of you that are on my email list. I sent out last year an example profit and loss statement that you can use to kind of calculate your profits and losses, etc. Or you'll get with your tax preparer or whoever handles your business finances, which you should be involved in it, because again, we practicing the CFO mentality. So you should really be involved in that process when it comes to your profit and loss. And then you're going to need projected financials, right? So that's going to include current and detailed 1-year projections of income and finances, and attach a written explanation as to how you expect to achieve that. So you can't just tell them, well, I'm going to make $200,000 a year. No, you need to break down and show them. Show them exactly. Show them how you're going to make this $200,000. Okay. In addition to that, You got to have your business license, your certificates. That goes without saying, right? Then guess what? They want to know your loan application history. They want to know how many loans you have applied for in the past. So in other words, they want your inquiry history, right? That's what we call it on the personal side. Your inquiries, all the places that you apply for credit, right? And last but not least, they're going to want your income tax returns. That's your personal and your business tax returns for 3 years, right? They're even going to want a resume, and they're going to do a personal background check, right? So all of these things that you need in order to get this SBA loan from a conventional bank. That's why I love business credit, because with business credit, it doesn't matter whether you're a startup or a seasoned business. We can help you start getting vendor credit in the form, help you start getting business credit in the form of vendor credit within the first week with no PG involved at all. And from there, we can build you to retail store credit and eventually cash credit. And there's no financials required. There's no collateral required. Oftentimes, there's no PG or personal guarantee required, right? So, I want to wrap this up, but I just really want you to understand that why I believe business credit is so powerful for business owners. If you're a business owner out there and you got that CFO mentality, why aren't you building your business credit? What are you waiting on? Because if you don't think that you're ready to make the commitment to build your business credit, please explain to me how you think you're going to take your you-know-what into the bank and get an SBA loan. All right? Okay, this is Brian Howard signing out, BK's Credit Group.